This episode of Masters of the Market is proudly brought to you by AIA Health Insurance with AIA Vitality, cover that protects and rewards. To find out more, call 133 AIA or visit aiahealth.com.au today.
Look, to buy when there's blood in the streets, lift up, check under the carpet. Many try, but few become master of the market.
Well, Lindsay Partridge, thanks very much for coming on Master of the Market. I know you're really busy, so appreciate your time.
It's great to be here.
And I thought maybe we could start by just introducing Brickworks. You're obviously the CEO there. Maybe it's a little bit of history around Brickworks and what your different business units are.
Well, Brickworks was originally put together by a bunch of Sydney brickmakers to buy the state government out of manufacturing bricks. That was back in 1934, and the government changed a few times, and that particular Brickworks, which eventually became the Olympic site, swapped hands a few times as well. But that's how we were formed, and they folded one of the companies in there, which was the Austral Brick Company, which is, of course, our national brand. That dated back, it started business in 1908. And that's how we got together. We had 11 plants across Sydney. They listed on the Australian stock market in 61. And in 1968, they were worried about being taken over by London Brick. And there was another company on the stock market called Washington H. Soul Patterson. It was the exact same market cap as ours. It was an interesting number, $26 million. They swapped 1 million shares, and then they went on and started buying shares in each other for a while. And in the end, actually, we spent $26 million. And that shareholding today, we have 39% of Soul Patterson's, and that's worth about $2 billion. And so that's one of our core and fundamental investments, which makes us a bit different from any other building products company. So that was one of the real foundations, and that got us through a lot of recessions and things. In the early noughties, we realized we had a lot of surplus land we didn't need for clay reserves anymore, and we're getting much more recycled clay in. So the whole concept of having thousands of acres of land for clay reserves started to come undone. And so we formed a joint venture with Goodman, and we got approvals for industrial property. I mean, we saw that there was a future position in industrial where there wasn't necessarily a future position in residential, or any residential land we would sell. And we started building, they'd go get a tenant and we'd build the shed and develop the land, etc. Anyhow, here we are. That was 2008 we kicked off. 2020, that's worth $2 billion. And our share of that's a bit over 700 million. So those two things, Soul Pattinson is about half of our assets. The property trust is about a quarter. So 3/4 of assets are in investments. So that means while we've got, building products can be very volatile, we have this enormous foundation of wealth there that allows us to really, just continue to pay our dividend no matter what sort of goes on. And more recently, we expanded our brick business. We couldn't expand in Australia. We already made half the bricks here. And so we've expanded to the northeast of America. So now we have building products northeast of America and right across Australia.
And when you look at industrial property, it's obviously been a pretty strong, fertile investment area recently with the move to online shopping and the macro thematics there. Do you think there's continued tailwinds there for industrial property, particularly when you compare it to the office market or residential property in Australia?
Well, we're very glad we're in that space, I've got to tell you. And, we just signed up Amazon, which was the biggest deal, in Australia. That's going to be a massive facility when it's finished. And a little bit before that, we signed up Coles with a new distribution centre. These distribution centres are completely changed. I mean, for the last 30, 40 years, if you were the most modern thing was to have cross-docking, semi-trailers in this side, semi-trailer out that side. Well, it's not like that anymore. These buildings, 10 stories high, semi-trailers come in one side and delivery vans go out the other. And so it's completely different. And the value of them, of course, is much greater than a single-story building. So it's a completely different concept. And of course, you're right, click and collect, buy online, buying from overseas and getting it delivered to your home in 3 or 4 days. This is the way of the future. And that's been really driving it. I think we're going to see more of those, and we've got the land available and the resources there to do it. And it's just a great opportunity.
And so you've got a portfolio of businesses and investments, and your net asset value is considerably higher than what your stock market capitalisation is. Does that frustrate you? And do you spend any time trying to unlock that latent value, or is it just the nature of being a conglomerate and something that just is what it is?
Well, look, I don't think it is what it is. We do go through periods when we're undervalued, and we go through periods when we're fully valued. The issue, what they see is they think of us, Brickworks, they think of us as a building products company. They look out 12 or 18 months and think our view is negative on building products, and so therefore we get sold down, not realising and not fully understanding what the company's about. And if you look over our performance since we listed, it's something like 12 or 13% compound since 1961. So there was only one year we reduced the dividend. I'm not talking, there was never any years when we didn't pay a dividend. 1975 was the only year we reduced it. It was either steady or went up. And there's very few companies, if any, that can claim that. People got to realise it's a very strong, solid, robust, conservative-run company. The engine that produces the wealth, sure, is building products, but we've managed to tuck enough away over the years that volatility gets washed out.
And I reckon one such company that's had a similar record with dividends is Soul Patts, who you share a cross ownership structure with. How aligned are the two companies? Do you actually ensure that the culture between the two companies are similar? From the outside, it appears to be they are, or are they just run as completely separate entities with cross shareholdings?
Yeah, well, I guess it's yes and no. Well, clearly, the Milners are the backbone of both companies, and their views, run deep, and their sayings over 4 generations run very deep through the company. So that really sets the scene for the culture. But they are run as completely 2 independent companies with 2 independent boards. Robert Milner, the chairman, is the only common director. He's chairman of both. But there are those same themes, and conservative, long-term thinking. It's not about tomorrow's profits. It's about the profit in 5 or 10 years' time or longer. So that's the way we think, and that's the way we operate.
And so there's lots of things I'd love to talk to you about today. I thought one of the things I was really keen to explore was a trend that appears to be happening around the world is this move from a globalization framework, which has been a really strong macro tailwind for a couple of decades, and potentially a move back towards localization. I guess before we go any further on that, do you think that is an emerging trend that we're going to see more of in the next 10, 20 years?
Yeah, well, definitely in certain sectors. And look, everyone's had a big scare. There's no doubt about that. When you can't produce any local pharmaceuticals, or you can't get your own face mask, there was a big panic. And it was interesting to see how quickly certain industries responded. But some of the factors that have been unleashed because of it are actually going to work against it. For example, international shipping prices will fall down because the demand drops off. And so that will make it easier for companies that are offshore to bring products in. I notice, we import cement, and the price of cement's come down. So if anything, it's worked into our advantage. And of course, we've had a strengthening Australian dollar, which is working against it. And all that is before we get to, some of these core factors in Australia that we need to address if we want to get more manufacturing back here.
So I guess there's the national security element of it. When you've got, something like 90% of antibiotics manufactured in China, if there's a trade alliance between Western democracies and China's potentially not a part of that, we're quite exposed. Is that's an important element that you think needs to change?
Well, look, I think we need a respectful relationship with China, and they need to respect that we might have views that are different to their own. But, a respectful relationship would mean we'd still trade. I hear what you're saying about it, and there's a lot of discussion about, a Western alliance or Anglosphere re-emerging, and maybe that's something from a defence point of view more than a trading point of view. Because some of this, we used to, prior when England, of course, before they were in the common market, they were one of our biggest trading partners, and we were, of course, smashed when they joined. And hopefully, we'd see more trade to England now that it's out of the United Kingdom, once it's now out of the European sphere. So I think there was some of that will re-emerge. And I think it makes a lot of sense from a defence point of view, with common language, laws, common history. That makes sort of sense. Common culture. But I think we just need to have a respectful relationship with China. Hopefully that can be 2 ways. And
5G appears to be in that national security sort of territory, and the potential role that could have going forward. What do you think the future looks like technology-wise, in terms of which countries we deal with, how open we are to other countries? Have you spent much time thinking about what the future could look like around?
Well, not really. We've seen through TPG that, of course, they were going to write out a Chinese-based equipment for their 5G network, and that got knocked on the head. And obviously, it comes back to a lack of trust there on the part of the Australian government with the security of that system. And we've seen the US also with TikTok and other things, saying these apps are banned because they don't offer security. I mean, the very reason that people use things like WhatsApp is, of course, they're fully encrypted, so they're hopefully private discussions. And but so people who are law-abiding citizens, that's not really an issue. But if you're not a law-abiding citizen, they think it's great. So, but yeah, I don't know. That those sort of things are interesting undercurrents. So I just don't know if any of them are really going to come and really sort of knock us about. There's other greater factors at the moment affecting us.
And so you park the national security to one side, then you've got a need post-COVID to create a significant number of jobs in an economy that's really suffering. What are the major roadblocks between creating manufacturing jobs in Australia?
Well, look, we have to go back to some of the fundamentals and the things that there's lots of issues out there that have been kicked around for a decade or more and never been addressed. I mean, Australia has a very, very difficult approval process. If you want to go build something, that new factory, we're trying to build new factories all over Australia, and the approval process has been horrendous. Having said that, it's been great to see what New South Wales has done and accelerated this program. 12 weeks for a new Brickworks for us here in Western Sydney was that's fabulous. The other end is the cost base, and we used to have. I've got nothing against high wages, and we're always compensated by low energy. And of course, what's happened? We've lost this advantage of low energy, and the classic is, we're paying less than $2 a gigajoule for gas in the northeast of the US, which is about the international market price at the moment, and we're paying $9 and up to $10 a gigajoule, which is down from where it was a few years ago here. So that's an enormous issue. Anyone who needs gas for a feedstock, that it doesn't work. And the conversation that seems to be going on is that so much of the population seems that you think that you can do everything with electricity. Well, of course you can't. You can't use electricity as a feedstock, right? You can't do it. So, and for us, the technology doesn't exist for us to run a massive brick kiln on electricity. We would drain the grid if we tried to put elements to try and do that. The technology is just not there. We could go back to coal, but we know that the community doesn't want us to do that. So, we don't. So we just bear the prices and we pass on those prices to community. And luckily, we have been able to recover them. But if you're making fertilizer or explosives or something like that, you can't pass them on because you'll just import the fertilizer or explosive at the international price. So,
and have we got issues where we're selling gas to Japan from Woodside for around that $2 mark, significantly cheaper than Australian companies are able to buy it?
Well, absolutely. The ACCC put out a very long paper yesterday about it, and this is the point. They said the international prices come way down to those sorts of levels. And it's interesting, the Indian government sets the gas price, and they've set it at $1.90 a gigajoule. This is yesterday. So, it's just completely out of kilter. And, the local exporters have held the domestic price up to subsidise their over expenditure on their gas exporting terminals. They got carried away. They built too many. I mean, that's the bottom line. We could have done with maybe 3 or 4, but we did need 6. And that's really upset the balance. They didn't. The last couple, they didn't even have the gas. They just said, we'll drain the network. And that's what really, put the pressure on domestic consumption. But it's not logical what they're doing. And I think it's very, very unfair for Australian manufacturers. And another point there is that most people don't understand is what sets the floor price for electricity is the price of gas. So if the price of gas comes down, well, the floor price for electricity will come down, and because then you can use it as a source, in the evening when there's no sun and so on. So.
Do you think there's a lot of people really passionate about the environment, and that's fine, but there's a desire by some people to lump all fossil fuels in the one basket, or actually even all minerals. They sometimes don't, identify the difference between coking coal and thermal coal when they're saying they're against coal, or gas versus coal. And I mean, the US carbon emissions have reduced a lot because of the use of natural gas. Correct. Do you think maybe understanding those nuances and balancing them out is important in this conversation, so that maybe some more productive decisions can be made about energy use in Australia?
Look, we would benefit from more educated discussion and community discussion around these areas. But unfortunately, a lot of people make decisions on what feels good. I think we're just trying to push it too quickly. Look, I think no one's arguing it's not better for the environment and better for health of everybody if we didn't burn these fossil fuels in the atmosphere. We all breathe the air. So, but how fast can we get there? What's a realistic timeline? Not trying to do it in 5 minutes. And this is the problem. There are assets that need to be written off and run out. There needs to be technologies developed We need to build a robust electricity distribution system we don't have at the moment. And, how do we get that? What's the stepping stones to get there? And clearly things like gas are a great stepping stone to help us get there, because it is much cleaner than coal. And there's no ash or anything going into the atmosphere. If you like to think about it, all that's been left in the ground. I mean, that's why fracking is such a great thing. Don't pull the coal out, just take the gas out, leave all the ash behind. It is much cleaner. But people get carried up in other issues. And, but by 2050 or 2060, there's a good chance it could well be, inverted from where it is now. It could be 70, 80, 90% renewables and only 10 or 20% fossil fuels. But that's the sort of timeline. It's a generational thing. It's not a single decade. It can't be done.
Even the fracking versus non-fracking gas, do you think there needs to be a greater understanding? Even if people are against fracking gas, it doesn't necessarily make sense to be against natural gas or LNG, full stop.
Well, yeah, I mean, in 2 states have banned, fracking, but in Victoria they've also banned natural gas.
That's right.
What? And drilling in Bass Strait. I mean, there's they don't even have to frack in a lot of cases. It's just as gas we get. So, I think we need a more robust distribution system. I think that would help. More competition, even though people argue whether or not they're viable. More competition is good. We need other sources of gas. There's plenty of gas up in Northern Territory. There's plenty of gas in the Perth Basin. I'm sure there's plenty of gas in the Great Australian Bight, but no one will go drill it. And fracking, look, I can understand if you want to frack around a town or a village or whatever, or you're concerned that there's a leak in the water table or whatever. But there are lots of places where none of those things are a factor, and you could get gas.
And so energy is a huge one. What are some of the other? I mean, you touched on red tape, even something like payroll tax. We've got a small apparel business we founded a few years ago, and I always looked at payroll tax as something that seems pretty unjust in today's environment when you're trying to encourage companies to employ more and more people, and there's the option to automate a lot of jobs. Do you think payroll tax is something that should be looked at to increase employment?
Yeah, look, I totally agree with you. I think it's the first tax that should be removed. I've always found it insidious. Because really, I mean, it's straight off the employees' wages. They'd be all getting 9% more. But I was actually surprised we actually pay payroll tax in the US. I mean, it is a low taxing country, but of course we have federal, state, county taxes and payroll tax. And so the overall tax burden's about the same. People talk about, they might have a lower company tax at the federal level, but then they have state taxes. Well, we don't have a state tax. And so, a way would be maybe the federal government stepped itself down, say down to 20%, and let the states take 5 or 10% of companies based in their state. Then all of a sudden they'd realize, oh my God, I have to attract some businesses and have to give them an approval. Otherwise we're not going to have any income. And they might actually become pro-business and try and help business instead of hinder us. And, one of the things that my prior chairman, I think it was going to pass out and faint, was when we went to Pennsylvania the first time, and the governor's representatives turned up at the hotel to greet us and to ask what could they possibly do for us to help, right? Help us and welcome us to their state. It's just impossible, it's just unbelievable compared to what we see here in Australia. So, there's that sort of thing that could be done, but definitely that payroll tax is another problem. Is like stamp duty. We used to have stamp duty on shares. They reduced it and the volume went up. Well, there's a lot of benefits that society could get with lower stamp duty on housing that would allow, the elderly widow on her own with a 4-bedroom house to sell the house and go for something smaller, but you won't because of the stamp duty. Now, some of these imposts have been removed, but there's got to be a better balance on some of these taxes. And look, there's a myriad of things that could be introduced. It would still give the revenue that the state needs, but not tax a specific issue like employment.
And we've seen the states deal with this current crisis in different manners. And I guess they're all going to be so desperate for jobs. Do you think there is going to be more of a competitive environment where state governments look to attract different businesses that are willing to create jobs in their state, maybe more so than there has been in the past?
Well, the way the GST works now, it's a disincentive, isn't it? I mean, if you've got a booming economy, the tax is going out of your state to a state is not performing as well. So the GST actually is counterproductive. And that's one of the problems with discussions in Australia. People only think of the first order events. They don't think of the second and the third order outcomes. Okay, if I do this, what is going to be the reaction of the people and the states, and they adjust to benefit themselves? And that's a second and third order impact. And that's a classic what's wrong with the GST. If it was based on what your turnover was in your state, full stop, then it would be a whole different situation.
And talk to me about the Australian property residential market. You touched on stamp duty before. A lot of viewers will be interested around our property market, and it's obviously pretty highly priced. What do you think is going to happen there in the next 2 to 3 years?
Yeah, well, it's going to be quite diverse. I mean, I think the big trends, and we're seeing them here and in the US, I think you're going to see houses in the outer suburbs over apartments. That's happening. You're going to see people moving to regional areas because they know that they can work from home. They don't have to come into the office anymore. They can work from home. A lot of companies said you can do that. So big demand straight away at regional areas. We're seeing high-end demand for people coming and specifying high-end houses, multi-million-dollar houses in the US and here. And of course, lovely, they're all face brick. And so we're seeing these trends emerge. There's no doubt that Sydney and Melbourne have been knocked around pretty savagely on pricing, and Westpac was saying this morning that they feel that prices will come down at least 10%. But in other areas, Queensland and particularly WA, it's had a very bad downturn. It was already starting to turn around and come up. So I think you're going to see Queensland, WA, South Australia, Tasmania, all sort of just continue on without hardly miss a beat. New South Wales and Victoria are going to have a bit of a struggle. So those are the sort of the big sort of trends that we're seeing.
And you think that work from home movement isn't just a 6 to 12 month thing while we get over the virus? You think that's a longer term trend that's going to be here to stay?
Well, if we take the view that it's a year before we get the vaccine, or in a year's time we're back to the beginning, if we've got to let it run through our society, it's going to be that long. It'll be 18 months into it. I think people are going to make commitments. They are making commitments based on the fact that they were given approval to work from home. They're not going to want to come back. I've been concerned for other reasons with like young people on their own, you know, in a small apartment over a long period of time about their mental health. We're trying to encourage them, if they want to come to work, come to work. So we've been a pretty open sort of policy, allow people to do one or the other, whatever suits them. And we're worried about our culture if everyone works from home. So we'd like to see people in the office a couple of days a week, but on different shifts. So we're not allow people to cross-pollinate at all. So I think that's going to be a bit of a mixed bag, but I don't think there's going to be many employees that demand that employees turn up every day, unless it's something like manufacturing where they physically have to be there.
When you look at your office footprint, is that an area of the business where you'd like to shave off X% to save some money, or you're not looking into it at this stage?
Look, we were very lucky because we're so diverse anyhow. And, you know, we never went to the chicken coop type arrangement, only in a few places. I never agreed with it. I thought it treats humans don't meant to be dealt with like that. And so we haven't really got a problem. We've got a couple of places we're going to have to spread it out a little bit, but we're in the process of putting a new office in anyhow. So we'll just spread people out a little bit. But it'd be interesting. That's a real good question, though, about what's going to happen to commercial property in the city, because on one side, of course, you're going to have a lower density, but on the other side, maybe half the people are at home. And where's the balance? Is there a surplus or there's not a surplus? We'll have to see. But either way, I wouldn't be putting money in that sector. And it could be a while before we see a lot of cranes on the horizon again after the current crop is completed.
Yeah, I think some of the incentives being bandied around in Melbourne office space are sort of 50% at the minute for extended leases, which is extraordinary. Talk to me about migration has been sort of a key pillar of the Australian economy, and really it was responsible for us not having a recession prior to this since 94. The government will look to boost migration, you'd imagine, once it's allowed to keep our property prices high, but there's going to be a balancing act with these new Australians wanting jobs versus the people currently here desperate for jobs as well when this all clears. How do you think they'll go about navigating that balance?
Yeah, look, and look, you go back to the GFC, it was a great example where they did increase immigration by 100,000 a year, and that was one of the issues, one of the things that they did that got us out of that recession. But of course, what it did also is kept the jobs recovery, the percentage of unemployment stayed high for the next 14 years or so. So it took a long time to get the unemployment down. In amongst all that, one of the parts of immigration, of course, is students. And so we got a whole sector here, you know, the university sector is knocked out because the customers can't get to, you know. So to me, that would be the first thing you'd do. You'd get them back, let them come through quarantine. They're going to do it. If you're going to be in the country for a year or more, you're going to do 2 weeks quarantine. Bring them through, you know, Hamilton Island or somewhere, bring them in. But then they need to get immigration going as a driver, because each one of those people that arrives creates demand, and that creates employment. And, you know, it was what we found was that even though we had close to full employment, if you call 5% full employment. Farmers couldn't get people at crop time or harvest time, and having to go to these international students and backpackers to do the work. And there's got to tell you, there's something wrong. Hopefully, I'd like to see a bit of a psyche re-emerge in Australia where people are proud that they work no matter what the task is, and they return to the workforce, because there's lots of sectors and regional areas they need these people.
And in terms of people being proud about work, and we've had big government stimulus handouts, and when the government tells people they can't work, that seems justifiable. How's it going to go when this comes out of the system? How do you think people are going to tolerate all of a sudden these handouts being taken away when the world hopefully gets back to some level of normality?
Well, I was just looking at some figures on this morning, and only 12% of that people who got that money spent it on food and alcohol, etc. Most of the other people either paid down debt, put it in the bank. They built up their personal balance sheet in anticipation that the money was going to run out. So, assuming there isn't a second wave and there isn't another huge number of people lose their jobs, you'd hope that most of those people are going to be reasonably robust when the reduction comes along, because most of them have handled the money responsibly. And so I'd hope that was the outcome. But for some, it's going to be pretty tough if they spent it all the way along. They'd be on the bones of the backside.
And in terms of, I know you touched on the GFC before, there was some introductions or some things introduced from APRA post GFC around the Australian banks and designed to keep them financially viable. And the net result of that was it just made life very easy for banks to loan to home loans and far higher risk to loan for other things. Do you think there needs to be something put in place around productive debt that's in turn creating jobs versus non-productive debt, e.g. just for home loans, to incentivise banks and other groups to loan to businesses or development companies that need that debt for more productive purposes?
Well, look, just to this current exercise, and we saw it in the GFC, this wasn't a financial calamity like it was in the GFC, and yet the banks tightened up the lending to corporations. But why? There was no reason to do that, and yet they made it much more difficult for most companies to get through the last 6 months than it would need be. And so, that is a concern, and yet they were really they told people who are residential borrowers that they could have, don't even pay your mortgage if you don't want to. Having said that, once again, I saw this morning that there's only 1% of loans in arrears, and some have asked for a deferral, but most people are meeting their commitments as required. And so at this point in time, there appears to be a fair bit of liquidity in the system, and there'd be no reason why the bank couldn't be lending for these other productive enterprises. But they're very risk adverse, and I go back 15 years ago or 20 years ago when we did some big acquisitions. One bank would lend us, $600 or $700 million, and now you have to have a syndicate of a dozen banks to borrow $500 or $600 million. Well, that just tells you how risk averse they are, and they're concerned about making a mistake. Which, yes, so somehow that needs to be loosened up, and they need to be more supportive.
Is it because it takes a lot more skill? If you're a banker and you've got to analyse each business and what their future prospects are, it requires a lot more skill than if you're just providing a loan for a commercial property with a 20% deposit, where it's harder to get into trouble. Is it as simple as that, or am I missing something?
Look, I'm not sure in the inner workings of the bank, but definitely they've become risk adverse, and they've been beaten up in public a couple of times, and I guess they don't want to be associated with a calamity, or if they are, they want to reduce the amount of the calamity to the minimum amount. But they're bankers, and there's a risk involved, and they need to take it. I mean, the people who are borrowing the money are taking the risk. They need to sort of toughen up a little bit. And we also saw the same with the politicians. All of a sudden, they can make the decisions in the last 6 months, was it unthinkable, 8 or 9 months ago. And I thought, well, okay, if you can toughen up and make the decision, then why can't you make some good long-term decisions for the country, all the time? Why are they so risk adverse?
Yeah. And talk to me about, just while we finish up, the broad Australian economic outlook. What are the exciting opportunities in Australia, do you think, over the next 5 years plus?
Well, obviously, the first one is get ourselves back on the feet and get the tourism industry going and get that back. I think the thing is that people go wrong in Australia is they think we're a developed country. We're a developing country, and we've got a lot of work to do to really, make this country as I hate to use the term, as great as it can be. And there's some great projects out there that mightn't have a payback in 5 years, but they'd have a real good payback in 50 years. And, you know, keeping the water in the Murray-Darling Basin is one. I mean, they've been around for 100 years, these proposals. High-speed rail between the major capital cities. You know, the strength of the electricity grid. There's a lot of things we can do and create lots of opportunities, high-paid jobs for our citizens. And that's, you know, just think about Western Australia, how big it is. You know, they've got water in the northwest, more than what they know what to do with. Most of it runs down the Ord to sea at some incredible speed. You know, if that was brought inland, I mean, the scale of the agriculture that we could have in Western Australia would be massive. And, you know, it just seems to be beyond, you know, anybody to grasp the nettle and go do it.
A lot of those projects, those big government projects, does it feel like now is potentially the time? We're going to have a lot of people that need work. We've got interest rates at all-time lows from the last 5,000 years. Is now the time for the government to go a little bit harder on debt and commit to fiscal stimulus more so than they have before?
Yeah, look, absolutely, and they should have a development fund, and it could be. We've got $3 trillion in super. We can put a trillion into there. The Reserve Bank is printing money, so why don't they put $500 billion in there and say to the citizens, if you want to put your super money in here, we'll give you 3% tax free, like government guaranteed. People would fall over themselves in the rush to put the money in, and we're going to build some of these big projects that are long-term payback for our country. I think it's absolutely it's the sort of time that we should. How did we ever manage to do the Snowy Mountain schemes? I mean, what a fabulous... That was in the 30s they envisioned this, you know. And we've been getting payback ever since. You know, it's, you know, fabulous. And so there's a lot of those projects out there and the sort of jobs that you create. I mean, and also you need to have a robust... So here's a classic. So you can't really fly at the moment, right? Because, you know, you're so close together and all that. But if you're in a train, you've got more space, you know, or if there's a volcano and you can't fly, the train still goes, or there's a bad storm, so it's a robust system. I can't go by the plane. The plane does it in an hour. By the time I go to the airport and all this, it's much going to take me 4 or 5. I can hop on the train, you know, down my local shops, and get off, you know, 2 hours or 3 hours later in Melbourne. Like, so, you know.
Is there? Do you think there's the commitment with the current federal government to commit to these projects?
I think we just have to see. I think they're in shell shock at the moment. And a number of them, and by the way, I think, including your Premier, needs to take a couple of days off, and you know, because these guys have been every day for 4 or 5 months. They must be exhausted, and they need to go away and have a rest. And you know, surely there's somebody else who can stand in there for a day and give the daily report, and give these guys a bit of a, you know, and women a bit of a rest. You know, but if they've got any fuel left in the tank when they get to the end of this, you know, maybe they will. I think, well, gee, if we can do this, well, why can't we do something big? You know?
Great. All right. Well, really appreciate the time, Lindsay. It's been great talking to you, and look forward to following Brickworks' share price and future prospects.
Thank you very much. It's been really enjoyable.
Thanks, Lindsay. Cheers, mate.
This episode of Masters of the Market is proudly brought to you by AIA Health Insurance with AIA Vitality, cover that protects and rewards. To find out more, call 133 AIA or visit aiahealth.com.au today. If you're enjoying Masters of the Market, make sure you subscribe to Chris Judd Invest.